A lessor enters into a 10-year lease of equipment with lessee. The equipment is specialized in nature and is expected to have no alternative use to lessor at the end of the 10-year lease term. Under the lease, and then the lease conditions are given. See, a lessor is entering into a 10-year lease and they say the equipment is specialized in nature and is expected to have no alternative use to the lessor at the end of the 10-year lease term. We know that one of the situations in which the lease is getting classified as a finance lease is when you enter into a lease transaction for a specialized asset. So we will classify this as a finance lease. Right, we will classify this as a finance lease, of course, in the books of the lessor. Lessor receives annual lease payments of rupees 15,000 payable at the end of the year. So lease payments of 15,000, remember this will be a part of the lease payment. Fixed payments are a part of the lease payments. Lessor expects the residual value of the equipment to be rupees 50,000 at the end of the 10-year term. Lessee provides a residual value guarantee that protects the lessor from the first rupees 30,000 of loss for a sale at a price below the estimated residual value at the end of the lease term, that is rupees 50,000. Lessor is of the view that when the asset will be returned back at the end of the 10th year, it will fetch 50,000. But what if it does not fetch 50,000? Then the lessee is suggesting that I am giving you a guarantee of 30,000. So 30,000 is guaranteed residual value, but the total residual value is 50,000. If 50,000 is the total residual value and 30,000 is guaranteed residual value, then the balance 20,000 is unguaranteed residual value. So 30,000 will be guaranteed residual value. Guaranteed residual value will again become a part of the lease payment. So lease payment will include 15,000. Lease payment will include 30,000, while 20,000, as we are seeing, is unguaranteed residual value. The equipment has an estimated remaining economic life of 15 years, a carrying amount of rupees 1 lakh and a fair value of rupees 1,11,000. So total useful life is 15 years. The lease is only for 10 years. But because it is a specialized asset, we have already classified it as a finance lease. And then they say the interest rate, the lease does not transfer ownership of the underlying asset to the lessee at the end of the lease term or contain an option to purchase the underlying asset. The interest rate implicit in the lease is 10.078%. So we will be using 10.078% as the discount rate. How should the lessor account for the same in its books of accounts? Okay. They have not clarified the nature of the lessor, whether the lessor is other than manufacturer or a dealer, or is the lessor a manufacturer or a dealer. We will provide treatment for both the types of lessor. But first we say the given lease is for a specialized asset. The given lease is missing. We say the given lease is for a specialized asset. Full stop. It is classified as finance lease. It is classified as finance lease in books of the lessor. It is classified as finance lease in books of the lessor. We then say treatment of finance lease. Under that we say a lessor is other than manufacturer or a dealer. Other than manufacturer or dealer. If you're still writing, just pause the video here and complete it. See, this is what is the treatment to be done. A lessor other than manufacturer or a dealer. At the commencement of the finance lease, lessor shall de-recognize the carrying amount of the underlying asset. So we say here that we will de-recognize the carrying amount of the asset. Yes, here they say that the equipment has a carrying amount of rupees 1 lakh. That's the first point. Second, they are saying that you should recognize net investment in the lease. Net investment in the lease. Remember, net investment in the lease is present value of gross investment. And gross investment is lease payment plus unguaranteed residual value. So if we check with the question, lease payments, 15,000 is a lease payment. Okay, 15,000 is a lease payment. Lease payment will also include the guaranteed residual value. So 30,000 is also a lease payment plus unguaranteed residual value, which is 20,000. It's present value. For present value, I need discount rate. 10.078% will become my discount rate. And then they say recognize in profit or loss any selling profit or selling loss. The difference between these two amounts, that will become your gain or the loss. So we provide the treatment of finance lease. We say de-recognize. Just a second, there's a slight problem. Say A, de-recognize carrying amount of asset, that is rupees 1 lakh. B, they say recognize net investment in lease, comma, determined as under these payments receivable 10.078% present. The lease is for 10 years. Lease rent agreed is 15,000. At the end of the 10th year, 30,000, and 10th year, 20,000. Right, this is guaranteed residual value. This is unguaranteed residual value. We require the present value factors, so please calculate it. Going to be for 10 years. So the 10th year present value factor, it is 0.0383, sorry, 0.383. And the cumulative one, 6.124. Discounted 11,490. 766. So the net investment in lease is turning out to be 1,11,010. So the carrying amount at which we will derecognize the asset is 1 lakh, and the net investment in lease which we have to recognize is 1,11,010. So your accounting entry will be net investment in lease account debit to, it's an equipment, right? So we will derecognize the equipment at its carrying amount, 1 lakh. The difference between the two is your selling profit, which needs to be recognized in the profit and loss account. So I say to profit and loss account, 11,010. So if you are still writing, just pause the video here and complete it. So this is if you are a lessor other than manufacturer or a dealer. Okay. What if you are a lessor who is a manufacturer or a dealer? Then what will be the case? Yes. Lessor is manufacturer or dealer. Here it is. Initial measurement for finance leases of manufacturers or dealers. What should we do? They are saying fair value of the underlying asset or present value of lease payments discounted using a market rate of interest. Whichever is lower is revenue. So we have to recognize revenue over here. Revenue is recognized, comma, which is lower of fair value of leased asset, that is rupees. If you just read over here, it's clear. Fair value of rupees 1,11,000. Okay. So rupees 1,11,000, or present value of lease payments. Present value of lease payments. Now you may argue that we have already done. You can see the calculation here, and you may argue that present value of lease payments is 1,11,010, but that's wrong. Lease payments does not include unguaranteed residual value. See, lease payments for a lessor is from the viewpoint of the lessee, and when we discuss it from the viewpoint of the lessee, we consider only guaranteed residual value. So this item and this item should not be considered. These two items, right, 15,000 and 30,000, that is only part of the lease payments. So only that should be discounted, and that will give you the lease payments. So we say present value of lease payments determined as under. Consider only the guaranteed residual value. You can copy from your earlier calculation. So we are not considering the unguaranteed residual value, and this is what we get, 1,03,350. Revenue is the lower of the two, so lower of 1,11,000 and 1,03,000. So obviously it will be 1,03,350. This implies revenue is 1,03,350. So we are through with the revenue. Next, they are saying cost or carrying amount of the asset less present value of unguaranteed residual value as cost of sale. Okay. Point B. Cost of sales is determined as under. We say carrying amount 1 lakh less present value of unguaranteed residual value. Unguaranteed residual value. Unguaranteed residual value is 20,000. Present value factor is 0.383. So it's 92,340. You're still writing, just complete till here, pause the video, reach till here. So we would like to now know what shall be our accounting entry over here, right? Net investment in lease still needs to be recognized. So we say net investment in lease account debit 1,11,010. Cost of sale needs to be recognized. So cost of sales account debit 92,340 to revenue, isn't it? The revenue that we had calculated, how much was it? 1,03,350. $1,03,350. And the carrying amount, of course, needs to be removed. $1 lakh. Let's check whether it's telling. Yes, the accounting entry tells. You see here, the last point. Selling profit or loss in accordance with the policy of the outright sales. So you may wonder, where is the selling profit? Where is the selling profit? See, cost of sales account. This will be ultimately be debited to profit and loss account. And this revenue ultimately will be credited to profit and loss account. So the P&L will be credited by the revenue, P&L will be debited by the cost of sales. Automatically selling profit will get recognized in the P&L, isn't it? Automatically it will get recognized in the profit and loss account. That's the end of the answer.